Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you as always for coming on.
Thank you for having me always.
Well, on Wall Street, the Nasdaq has seen an incredible rally in the past few months, much like Korea's Kosdaq, but overnight it was the biggest loser of the three big indices, down more than 2%. What's the story in the global markets?
Yes, as you said, Wall Street main index rose on Monday at the beginning. Nasdaq was hitting a record high again. Investors were anticipating that the earnings report will be relatively better than any other stocks, resistance showing to the COVID-19 environment. However, though, as the day gone by, the news of the closing down the business environment, for example, the Florida and the California, they all talk about the restriction of the indoor operation for shopping malls, fitness centers, and place for worships, and all the schools were supposed to be opening up with the internet related courses rather than any actual activities. That resulted into the negative sentiment developing within the market, and that caused quite a bit of a tumble for most of these stocks. If you look at the Nasdaq intraday, it was as high as 2% up and actually closed at 2% down. So one day swing of close to 4%. The Dow Jones gained slightly by 0.1%. In the contrast, the S&P lost about 0.9%, and Nasdaq plunged by 2.1%.
Well, Korean stocks down today too, both the Kospi and the Kosdaq. What happened in the domestic markets?
Yes, with this news of U.S. showing correction, Korea kind of followed the suit. The Korean stock slipped Tuesday following their U.S. peers lower amid the fresh Sino-American tension that's happening and resulting into the overall economic condition being quite weak. And rising COVID-19 cases is causing concerns for the economic recovery. And that has resulted into crude oil prices falling and also Kospi index declining by about 0.6%, and Kosdaq was down by about 0.7%. Particularly the leader of the overall market rise in the past has been the reason for the market down today, as Labor Corp contributed the most to the losses of the index decline, as it declined by 3.9%. Also, there's a news of the President Moon's announcing the New Deal program for 160 trillion won worth of additional boosting measures, and it will be helping out the overall recovery from the pandemic by reshaping the economy and around the technology. Obviously, a lot of the investments will be made by the central government. They'll be shouldering 114 trillion won worth of new spending plan, while the local government and private sector will be contributing 25.2 trillion won and 20.7 trillion won. Government wishes to push the new creation of jobs by 367,000 jobs in telecommunication networks, artificial intelligence, and other data-intensive industries by 2025. Overall, this is definitely positive news, but I think the sentiment was negatively affected because of the U.S. correction. We think, though, a lot of these measures are definitely positive news for the global Korean economy, and therefore, if there is any correction, we think that it will not last for a very long period of time. Clearly, additional liquidities, huge liquidity in the system, plus the fiscal policies would have positive implications for the equity movement in the future.
Well, you mentioned oil prices there. We're watching now to see what the oil-producing countries decide to do later this week in terms of increasing output. Ahead of that, oil prices down about 1%. What's your outlook for oil?
Yes, as I said, the oil is pressured on both sides of production as well as the demand side. The production obviously is because of the shale gas, additional production that's been put in by the U.S. companies. As for the demand side, the COVID-19 is affecting quite negatively as the paradigm shift is happening between gasoline cars to the electric cars. However, furthermore, if you look at the what California Governor Gavin Newsom ordered is that they'll be closing indoor operation for several businesses, and clearly that puts a negative sentiment, and that might be happening not just for California, but maybe Florida and other major states. So if that is the case, then clearly the oil price would have a difficult time to rise further. We were anticipating anywhere between $30 to $40 range, but because at least the economy is improving somewhat, we think that range bound has risen slightly. So we're probably looking at somewhere between $35 to $45 oil price range in the future. Hopefully we'll see some of the recovery happening despite the pandemic issues as the new drugs come out and vaccines come out in the future. We do think that the economic growth rate of U.S. as well as global economy to recover in the third quarter and particularly in the fourth quarter. If that's the case, then oil price would have a relatively better demand. But nevertheless, the paradigm shift is there, and therefore box range will be most likely, and we're looking at somewhere between $35 to $45 range over the next 6 months.
Got it. All right, Mr. Yu, thanks so much for sharing your insights today. We appreciate it.
Thank you very much.